the analysts were talking about how the Chinese economy would bounce back on the back of the pandemic. And recent growth numbers from China seem to suggest that corporate growth is struggling and
Right.
that isn't happening. Is China facing a temporary blip, or is it looking at a new normal? It's very different from what they've seen in the past 30 years.
Yeah, I think China's growth rate has been slipping consistently already over the last 15 years. You know, in the 2000s, the Chinese economy grew at a rate of 10%. Last decade, the economy grew at a rate of 6%. I think in the coming decade, my projection is that the Chinese economy will grow at a rate of 2.5 or 3% every year. So these are
So you're
dramatic
far more
shifts.
bearish than a lot of
But I
people
think-
here. in
Yeah, I mean, I've been so, but again, for some very fundamental reasons, that China's population growth today is declining. In the history of economic development, there has never been a country that has been able to grow at a rate of even 2% when the population growth is declining. There just hasn't been an instance. So that's one. Two, that China's debt level today, if you look at its total debt level today, is higher as a share of its economy than even the United States. So it has already spent a lot of its bullets. So I think that those demographic and debt kind of dynamics is something which is likely to handicap China's economic growth rate. And so therefore, I don't see the Chinese economy on a trend basis growing at a rate of more than 2.5, 3%. This year, it's expected to grow at 5%, but that's as per official data. And I think that, and also because it's rebounding from a very low base of last year, but a 2.5, 3% type of growth rate for China is what I think is more realistic.
On the complete contrary, there are those who think that China could be looking at a doomsday scenario.
Yeah.
The debt levels have piled up. You spoke of how the official data can't really be believed
Right.
fully,
Yeah.
and that what's built up inside behind that Great Wall is actually much worse than the Chinese government would have us believe. How real could that possibility be? Or is that just like Indians hoping that something goes wrong with China?
Yeah, I think that one thing which China has in its, you can say so-called favor, even though that's maybe not the right word, is that a lot of the debt in China, in fact, almost all the debt is owned domestically. So there are no foreigners who own the debt. Typically, when you end up getting these kind of big crises, it's when the foreigners come calling for the debt. But in China, it's a hothouse effect where everybody owns the debt internally and they can keep passing the parcel. Now, that's not good for productivity, because over time, if you have too much debt in the system, productivity declines. But a full-scale implosion of China, nothing can ever be ruled out, but just based on past historical experiences, that's what saves China, I think, from having an outright financial crisis. Now, remember one thing, that if you have an outright financial crisis, sometimes that's the clearing mechanism. That, like even India and other, when you have a crisis, that's when you end up getting the maximum reforms, you clean the balance sheets and you move on. I think that's one thing. But having
But they're
said that,
becoming kind of anti-capitalism or anti even their private companies who were their brightest stars, and that's never a good thing for any country that hopes to grow.
That exactly, and I think that this is where India needs to sort of once again keep drawing the lesson that China did very well when it was very supportive of foreign investment, very supportive of private capital, when it wanted to learn from getting foreign expertise in to the country, and now that China has totally vacated that space and there's complete skepticism. I spoke about FDI numbers, that when China was booming, China were they were attracting FDI numbers, as I said, of 3-4% of GDP. Now it doesn't even do I think even 1% of its economy in terms of foreign investor flows. So I think that's where India needs to sort of learn that, okay, this is what China did right, this is what it's doing wrong now, how do we offer an alternative? And as I said, that having that the biggest thing I'd like to see in India today is for the state to rein in its various arms, where the businesses and foreign investors feel much more comfortable than being randomly targeted. Now, you can argue that the random targeted is happening because of some political motivation of who you want to target, but I think what's very important for the government to realize is that this has major collateral damage as far as private investment is concerned, because it sort of leads to uncertainty in the private investment person's mind as well, that they can come after me as well.
If you like the video, do like, comment, share and subscribe.